see you here too. Great stuff. So, there it is, the live trading room. All right, before we start, the risk disclaimer explaining that trading foreign exchange, but all global financial markets in general, is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this video and webinar is for educational purposes only. So thank you for your attention on that. Just in case, I would like to actually confirm if you have visual and audio. Just want to double check actually. Someone could write only a few. Perfect. I already have the answer. Great. So all good to go. So here are the times with regard to our London trading time. All right. So check which time is relevant for you. Then we're going to be taking a look at my account here at Admiral Markets with my own money. We're looking at especially breakout strategies at different time frames. We'll take a look at intraday time frames, swing, and when that all has been done, then at position trades. Position trades, of course, are not that time. Importance in time is a bit less, of course. So we'll do that as last. Hopefully, if we have enough time within that 1.5 hours. Anyhow, probably most of you are interested in intraday and swing, I would assume. So what is a breakout? We'll be looking especially at breakouts, but we can look at fibs as well. And breakout is just a movement of price out of a consolidation zone, such as like this black boxes that you see on this chart. All right. Make sure to follow Admiral Markets on Facebook and Twitter. And let's take a look at the calendar as usual before we actually look at the charts. Quick look there. All righty. So we had some news events on China data. Looks to be a bit positive. And we have not really any high impact news here. We have the pound manufacturing production, which normally I consider high impact, but it's medium impact here. And otherwise, we have Euro Econ-Fin meetings the whole day. And we have a monetary policy statement of Japan as well, but that's way later in the day. That's New York time, evening New York time, so that's almost 12 hours from now. So really nothing that substantial, maybe only that pound news as usual, 1 hour, 40 minutes from now. All right, so let's move on and take a look at the effect the interest rates had and the events of all events the NFP had on the currencies. We saw a continuation of dollar strength, of course, after those 2 days on Thursday and Friday. But in both cases, the euro, pound, yen, dollar, Swissy, just as a general comment, they are running, they're still at a potential talking spot. Are we going to bounce or are we going to break immediately? Just because we're at these support levels, I wouldn't necessarily assume a break. We definitely could break, but wouldn't necessarily assume it. If we look at the 4-hour chart here, or the day chart maybe better, you can see we're right at a trend line. We're also just right at horizontal support. So those things definitely could make the currency retrace a bit bigger than we might think at this moment. All right, that's always something we have to be aware of. If you look at this picture maybe like this, you can see kind of a wedge here like that, so maybe for example, the euro could have space to go back up to the wedge. All right, that is a risky, difficult trade to take because we've had a massive impulse. So that upside is not an easy thing and might not even occur. It's very risky in my opinion. So personally, not looking to chase it or catch it actually, because at any point in time it could turn and break. So in my opinion, the preferred trade would be to try to catch a break to the downside and play it and be careful of these support levels, because all of these daily levels could be support when we break the next level. So if we break this 127.90, The next support level is 127.50. If we break that, the next one is 126.60. After that, then we have more space. So, you know, that is difficult. All right. So the best is downside, but we have to be trading it with caution and with realism, basically. All right, that's what it boils down to. We have to treat it with care. All right. So if we get any upside motion here, and we get any rejection, we get any reversal candlestick patterns, it's good to go for short, and hopefully we'll reach the target, which would be any of these support levels. All right. We have to be aware that it could go down and then make a bigger correction. So anytime you get a good, decent amount of pips, we'll have to move it to break even. All right. Anyhow, I don't want to bore you. That's just a quick, you know, interpretation of what the dollar did last week. I don't want to dive into. We'll dive into it a bit further in a second. Let's first look at our London Open trade, as usual, before I scare too many people with my boring comments. Let's take a look at the London Open. So London Open is a trade that is based on a 50-minute world, all right, and we need an angle of the moving average. We need it to be in a trending mode, all right. So, for example, clearly the moving average here was down, the 89 EMA, by the way, all right. This is 144. Excuse me. We have to be on this chart. Sorry, the 89 EMA. Okay, it has to be pointed downwards. And or upwards. It has to have a slope, let me say it this way. And now it's flat, so there's no angle to it, which means that there's no trend on this 50-minute world. Okay, we were only looking for an angle, if it has an angle, and then a break below a consolidation period between 5 and 7 a.m. Central European time, and a break about after 6 and 8 Central European time, and a break after 9 a.m. in the same direction as the trend of the 89 EMA. So if it's a downward sloping 89 EMA and there's a consolidation between 6 and 8 a.m. and 9 a.m. after that, the currency breaks to the downside, that's good to go. If it breaks to the upside, it's counter trendy 15-minute 89 EMA and it's not a go. So in this case, we don't have a trade because the moving average is flat. Okay, so but basically, so that's invalidated. So let's move on. That won't happen, that trade. The London Open trade is a no-goer. But from a bigger perspective, you can see that clearly that we are at a bigger bottom here. And it's yesterday's candle made a small bullish day here. And we're actually breaking yesterday's high after retracing yesterday's candle. So here too we're at a talking spot just like the euro. So we could get some retraces to the upside, maybe based on that. But here too, 1 hour world is looking pretty good for a retracement. If you're honest to me, the euro too. If you look at the 1 hour charts, all of them have retraced nicely. Technically speaking, this is already a nice retracement. So any break of this trend line, for example, could be a good indication that we're making that downfall. All right. On the euro, let's see. Let's go to this chart. On the euro, you can see clearly, you know, if we break below this trend line, that would be a good downside too. All right. At the moment, price is moving up. To be honest, if you look at the 1 hour chart, you can see bullish candles, right? So the only way we can trade a downside, or I'm trading a downside, is either a rejection, you know, we make a big move up like this and we get a clear rejection bar here and then take it down, or if we break this trend line. Those are signals that we're good to go for downside. One of the two. Otherwise, price is moving up at the moment. We can't do anything about that. So the only thing we can do is either trade it to the upside, which in my opinion is risky because we've had this massive downside already. right? Clearly on the 4-hour chart, which we should use for, I mean, what I use for a trend definition, we clearly have lower lows, lower highs. And this is valid for euro and pound, by the way, it doesn't matter, right? So it's clearly a downtrend, but on the 1-hour chart, price is moving up, all right? So, you know, if you were clever enough to have anticipated that bigger correction somewhere here, that's great for you. And you're up 40 pips or yeah, something like that. Perfect. Try to catch profit maybe somewhere, you know, at a reasonable spot before this top at least, because that's the likely resistance area, the 130 area. All right. But otherwise, it could keep doing this in a very slow move, and then eventually later on this week break. All right. Now, how much it will break depends, because everyone is looking at the same horizontal levels and seeing that as support. All right. So that's why it's going to be difficult to crack them. Not that it's impossible, but it's going to take some force to go through that level. All right. Just like it didn't break when we approached it here with some momentum, we didn't break either, and we made it up, down, and up, right? So we have to, we have to be realistic about that. So basically, you could, if you wanted to, you could trade it to the upside as a counter trend trade. Personally, I wouldn't recommend it. Price is moving up, but I would rather wait. Trend is down, so what I rather do is trade with the trend, which means that I rather wait for this currency to show indications that the lower time frames are turning back to the downside, which would be, you know, in line with the bigger trend. And once we do, you know, make a resistance here or a rejection or break that trend line, and we do go down, then we have to be realistic about our take profits and be careful to move it to break even if we bounce somewhere in here, because that's what could happen. Okay, so if we do that, there should be no problems. If we're realistic about the take profits and realistic about moving it to break even, just in case that this does give a bigger bounce within the wedge, because it's in the wedge, it could make a bounce back to the top of the wedge, just like the euro pound has been bouncing up and down, right? Let me show you the euro pound. Here is the euro pound. Take a look at that. What do you see here? A huge range, right? Exactly. So that has been, you know, bouncing back and forth for very long, right? Top, bottom, top, top, middle, bottom, top, bottom, top, bottom, top, bottom. I mean, this has lasted for ages, right? We've been talking about this range trade already, at least at this area, right? Where I have the green box. And it's done that a lot. Now finally we got a break above that. We have a close above it here. So maybe we'll make that move, but there is a big weekly trend line. There is a good chance that we'll respect it and then break. That is my anticipation based on a wave analysis, which I won't bore you with. But if you're interested, let me know. I will tell you, but otherwise, I'm assuming you're not interested. Well, I didn't mean it like that, but I meant like that you don't like Elliott wave that much. But I am assuming a move to the trend line, weekly trend line, a respect of that, and then a continuation, personally. But let's see. All right, that's never a guarantee of that. So that's, for example, anyhow, to come back to the point, that's the euro pound, right? So interesting break of that top here. So we might make that move up, and then I will have to see if we get a move back down, or do we indeed break it, right? So let's go back to the euro in any case. Wait, I was on this chart, I think. Yeah, I think so. Anyhow, um, yeah, this one probably. Yeah, it was this one. Okay, good. So that's basically it, I guess. That's basically it. Anytime this 1 hour is back to the zero line here, it was a good moment for retrace. So that alone could already be the indication that we make that retrace. The only difference is, look at these moments. The only difference is that, we're at a pretty big support level. So personally, when I looked at it this morning, I looked at this, and it was, looked like perfect for a break, to be honest. I mean, we had the AO0 line, we had an up move, down move. It looked perfect for a down break, But I guess the only difference is that we're at a bigger support, and that's why I think buyers did step in here and felt confident enough to push it higher, because otherwise, technically, from all other angles, this was pretty good setup for downside. It's just that the place where we were was a big support level, and I think that explains this upside push here. All right. But the question is, how far will it go? At some point, it's going to find resistance. All right. From a smaller time frame, if we zoom into, for example, the 15-minute world. Oh, just give me a sec. I deleted. All right, there it is. From a smaller time frame, the 15-minute world here. Sorry about that. You can see that the moving averages here are kind of, I did it again. Moving averages are intertwined, showing a bit of confusion here on this time frame. And actually, the price is pulling the slowest moving average, the fastest moving average, which is 12, to the upside. So you can see slowly but surely on this time frame, not that I would encourage looking at this time frame necessarily for a trend, but if you look at the 5-minute world too, you can see they're being pulled apart. So technically speaking, this could be maybe a intraday trade, right, to the upside. It could be possible. If we get a stochastics low enough, under the 20, right, and we get a move down to these moving averages and a bounce here, then we can see maybe one more upside. If I'm interested in that, not really, because to me, I'm looking at the bigger picture and I'm seeing, on the 4-hour chart, I see a massive downtrend. But if you look at the 1-hour chart, you can see already an uptrend, right? If you use the 1-hour chart as your trend definition and then the 5-minute, then this is a retrace actually. So the question is if this will indeed continue to correct up. Because of the 4-hour world, I'm very leery of that, but I'm sure some people would consider that already as a good moment to do that. Personally, I think it's too early. Personally, I would be looking more for what I would consider a change of trend. Is only personally when I use this 4-hour chart as a move up, preferably to break this high, move down, and a bounce here, and then we have higher highs and higher lows. Okay, so that's that. But yeah, it is maybe a potential on this time frame to get that bounce here. All right. So let's move on to something else. I'll be monitoring especially this 1-hour chart actually here to see, that would be my main indication to see if we break this trend line or if we have some major 1-hour resistance price action. Those would be my main things to look for, to be honest. All right, so let's go back to the euro and pound at the end of the hour and see how that happened, how the candles closed, because that will be my main method of, my preferred method of trading it, to be honest. So we can take a look again at the end of the hour. All right, we do have, just give me 1 minute for in Q&A. Okay, so bear with me. Some patience with me. Let's see. Bogdan is saying it. He was right about pound, gold, and euro about to drop, and now I think that Bogdan thinks that they're in correction. Let's see how long the correction will be. Yep, I agree. Totally. That is always, it's always a game of cat and mouse indeed, and in the Forex it's a game of impulse correction basically, and the best is really to catch it when it breaks impulsively in the direction of the trend. So you have a downtrend, for example, but price is moving up, and then you catch the break to the downside when the impulse is going back in the direction of the trend. Those are always the best. They're the safest, they're the fastest, they're the most precise and most profitable. Absolutely. All right, the moving averages, I have all kinds of moving averages. They're all fib numbers basically, and it depends on which chart we're looking at. No, it's not 1050 200. It's basically all the fib numbers, and I just combine them in different settings. Okay, so you know the fib numbers, Sherry? Alrighty. So what I suggest now is to take a look at all the other currencies and see if there's anything interesting, to trade. The euro, not yet, in my opinion. Pound, not yet either, because price is moving up, and I want to trade it down still. I mean, I know that we're at some traders might think that there is a good chance it will bounce, but I'm not focused on that, to be honest. I don't care really if it bounces here, fine. I really don't care about missing that part. All right. Basically, what I care about is the middle 80% here, that part. That's where I care about. I'm not that focused on this part, nor necessarily on catching the last part either, although it would be nice. Let me say it. So that same is valid here. I rather try to see if there's some more downside, because this is the trend, and if it does show me reversal signals, I will wait for the hook back and then take it to the upside. Very simple. So that's why the euro and pound are not interesting for me at the moment. Okay, let's continue though and see what else we have. Sherry, those are fib numbers. Do you know the fib numbers? They're all fib numbers, basically. Fibonacci sequence numbers. Do you know them? What are Fibonacci sequence numbers? Yeah? Okay. So all of them. I have 13, 21, 8, 34, 55, 89, 144. You can use all of them. Those are I like the most personally. And of course, the higher, the more longer term, and the closer to 8, the more shorter term. I'm not sure which chart I was showing you, to be honest. Which, I don't know which, let's see. Is it this one? There are 3 lines. This one maybe. 144, 34, and 13. Cool. Alrighty. So let's take a look at let's see. Let's just go one by one. New Zealand dollar, see if there's anything interesting. New Zealand is breaking to the upside. Actually, it wow, look, it really had a tough time here, didn't it? Huge sideways move. Sellers couldn't drive it lower, and it looks like buyers are regaining control here. It's not that interesting for me because it has traveled already way too much for me to be interested, to be honest, and it's right at the top. So the only thing is that if there is maybe some 1 hour price action, a good rejection wick here, maybe for the downside. That's the only thing that I could see, to be honest. But that would be at the minimum a 1 hour chart. I would not take anything lower because the 50-minute world could give many false signals with rejections like that. All right. The problem is that yes, we are at a potential resistance spot. Then again, we are also breaking above it. So it's kind of like in a caught in two worlds in a way. If it does, that's why 50-minute chart I would not look at. 1 hour chart is different because that could be a good price action signal that we're going to make at least some downside, and then we'll have to see how price moves. If it moves fast, then I'll probably aim for a lower target. If it moves slow, then I'll probably aim for something in here because it could bounce again. All right. So could be interesting, but not for upside. Upside already traveled really too much, for my opinion. The only time I would be interested in upside if it does something like this, like a bull flag chart pattern, and then breaks that bull flag and moves up. That's the only time that would be interesting. In that time, the trend is up because the 4-hour world broke the high. We're making higher highs, higher lows. If we're making consolidation, break that consolidation, I would take it to the upside, but not now. So let's move on to the Aussie. And the Aussie, based on the Elliott wave theory, I wrote an article in here saying, by mid-June, the Aussie is going to be at 91.50, 92, which is exactly what happened, but actually we continued further to hit almost a 90 beginning July, 2 weeks later. So for those of you who don't like Elliott wave theory, sometimes it does give you a good heads up, of potential, kind of like potential movement, you know what I mean? So anyhow, that was cool. Very nice downside. Aussie had a lot of weakness in it. And let's take a look at this week chart quickly. I'll get rid of these lines. $92.48 is last week's high. That is an important level. We've retraced a lot, actually, compared to last week's candle. So that's interesting fact, actually. All right. As long as this keeps showing bearish weekly candles, I'm not assuming any bigger retracement. Yes, we've moved down 1,500 pips, but it could move another 1,000. Who knows? All right. So especially if we stay below 92.50, last week's high, no reason to anticipate any trend change, basically, in my opinion. All right. So definitely downtrend still. And the next weekly support is all the way down at 81, basically. So there's a pretty big gap there. Let's take a look at the day chart. And it's a pretty neat channel in a way, maybe like this. Well, you could draw it many different ways probably, but something like that. Pretty steep on the day chart, but you get the picture. Something like that is possible. You don't even need trend lines. You could just look at the moving averages and look at your angle, and then you see how how impulsive price is staying underneath those moving averages, basically. Right? You can see even this. It's a straight down move indeed, Cheryl. Absolutely. And look at this 12 EMA. This is 12, 12, 13. It's about the same. Sometimes I use 12. It's about the same what am I saying? The price stays under this 12 EMA forever, right? It's just keeps going. Only two retracements basically that were big enough to push above it. That's here, and here, and here, and maybe now. And here we can see maybe a bit of a angle to it if you connect these bottoms. So we're kind of a bit rounding here, but that doesn't necessarily mean that the thing is definitely changing. All right. Take a look at the 4-hour chart. You can see that a bit here as well. Kind of like small falling wedge, which we just broke out of actually this morning. Here too, we're at key resistance. All right. This is definitely key resistance here. Important resistance. But the major one, 92.50, and this, even this top still, which is a daily high, right? So all these blue lines that I have here are really important to me, and only a break of 92.50 would make me a bit, skeptical. Maybe this is, let me say it this way: anything underneath 92.50 is downtrendish. Anything between 92.50 and 93.40 is kind of like a neutral zone. Maybe we'll have to see how price reacts. And above 93.50, then we're getting maybe in the meantime into some bullish territory. With caution though, because of this huge down move in the Aussie, which we definitely don't want to estimate. All right. So in that regard, it's kind of like the New Zealand. This is a pretty interesting 1-hour wick here, right at resistance. That to me looks like a perfect exhaustion point, actually. Even better than in New Zealand, maybe. 50-minute wick already. 50-minute wick has a wick already here. But there's no rush in my opinion. I would personally rather wait for 1-hour chart to finish this candle. Let this candle finish, because you never know. This candle could still close like this. Although it looks bullish, bearish now, it could still at the end of the hour it could close like this, and in the next hour we keep pushing. For example, So I definitely want to wait for this. How does this look like? Does it look like this, or does it look like how it is now, which would be bearish? But we still need 40 minutes for this candle to close. So that would be interesting. I'm going to take a look at that at the end of the hour, 40 minutes from now, because that could be definitely a rejection 1-hour wick there. But that would be cool, because here too, we're definitely in a downtrend. No doubt about that. You can see the day chart, right? As I said, the price was underneath the 12 EMA. We're just back at the 12 EMA. If you look at the 4-hour chart, we've stayed for many times. We've stayed under these green and blue ones. We've had some pokes above it, as I said. But hardly, this is one of those pokes maybe. And if we get a 1-hour rejection here, there's a decent chance to make a fall, even if it's back to support here and a bounce or continuation. Either the two, that fall seems pretty good. So yeah, good. So Aussie is on my list. Let's continue. Before we do that, anyone have a preference for a certain chart? You please, by all means, let me know. And in the meantime, I'll just answer Cherry's question. Regarding, well, basically the moving averages, in my opinion, they work well in all time frames. It's not like the longer time. Let's see. I'm not sure if I understand the question. In longer time, the MA crossover will work better. Well, I'm not looking at crossovers, to be honest. I'm looking at price relationship towards the moving average angles, the moving average relationships to each other on different time frames. I'm not looking for a crossover necessarily. at max, I'm looking for price to cross over the moving averages, not the moving averages to cross over themselves. We actually had a webinar on that Thursday. I thought we talked about it somehow. I don't know. Yeah, we talked about. I thought it was last Thursday or last Wednesday, I think, or Thursday. We had a webinar with Tarantula, educational webinar. You can look at it, and the archives. You can go to the archives there, and it should be a recording. Okay, Sherry. Oh, you're talking about, yeah. So I'm focusing on these EMAs indeed, but not on crossovers. So we had a request for gold dollar and dollar CAD. Definitely, we'll take a look at that. We can do that right now. We can skip the EJ for the moment, and we'll continue with those later. Someone asked me if I look at the dollar index. I forgot, by the way. Let's see. Richcraft was asking that. Yes, we do. We can take a look at that as well right away. And Kirill was asking about reversal signals, which I forgot to mention. Let's see. Well, reversal signals, any candlestick formations, any change of price action from impulsive to corrective or impulse, major support and resistance levels, horizontal levels, or trend lines, any wave, if we get any wave count, that would suggest change, fib bounces, breaks of highs and lows, and classical higher highs and higher lows, lower highs. All of these could signal trend reversal, basically. And I know it's a lot, but they all could. And more or less, I do use them all of them. It's just maybe not all the time at the same time, or not all equally maybe important. I've never really looked at that. What I use for trend definition is the 4-hour chart, and I look for an angle of the trend and higher highs, higher lows. And then I check structural support and resistance on the day chart. That's what I use for trend definition for myself. Okay? If you want to know more about that, I can dive into that, but I don't want to bore the others as well here. All right? Because otherwise people will be sleeping. So this is the dollar index. Dollar index reflecting that euro and pound, right? It's right at the top. And it's right at that blue trend line somehow. So it's kind of the same as the euro dollar. It's just the opposite. It's moving up instead of the euro pound dollar down, of course. But otherwise, it too is at a interesting spot of either bounce or break. And it too had a bearish day candle yesterday. So it too has the question: do we retrace more down, then break? Do we break now? Or do we retrace further down back to this blue line? For example, those are the questions. So we need to zoom out and in to get that answer. And if we zoom out to the week chart, we see that we're also at the resistance weekly line. All right. Then again, we're an uptrend on this weekly chart, so we could break that line. If we zoom in, we see we're definitely in an uptrend as well. All right. So it would be great to trade it to the upside when we break these levels. Or if we see some reversal signals in here, or a break of this, just like the euro, basically. Otherwise, I could get caught buying the dollar right in here while we start to make a bigger correction. That would not be pleasant. So that would be the dollar next. But if Rich, if you have any specific questions about it, just let me know, okay? Otherwise, I'll move on to gold and what was the other one? Gold, dollar CAD, dollar yen is on the list. Let's take a look at dollar. Dollar gold. I'll just log into my live account in the meantime, just in case I want to take a trade. Then it's already prepared. Let's see. I will also open gold because the previous one wasn't working. Alrighty. Let me quickly put a template on it. Let's do this one, I guess. One second. Let me just give me a second. I'll restart it again. That's weird. Let me use a different template otherwise. Huh. Let me, I don't know why the template is not working. Let me try a different one. Oh, this one works. I don't know. There's something wrong with that template, I guess. So anyhow, gold dollar XAU USD. Here it is. Very simple. I think personally, if I look at this, and if you put a fib on, let's see, can I go to, yes. If you put a fib on this very, very big up move, of course, which we had since the beginning 2000s. All right, look at this. What a curve, isn't it? Wow, amazing. Look at that, from the beginning 2000s where it was at 240, basically, all the way to 1920, or August 2011. All right. So if you put a fib on that, the 50 fib is at 1080, which I think is interesting. That could be maybe a bouncing spot here and turning spot for gold. All right, so that's definitely a level I want to be aware of. That I just wanted to show you. Maybe I already told you. Then if we look at the weekly chart, I already was expecting this downside. I know the one that's on area, but if you look at it, it was the impulse, correction, downside. And I wrote about this in articles as well, so well publicized before the fall, just in case. And around here, gold and the stocks changed their opinion finally, and that's when the fall also came. So if you look at this down move, it looks like a three-wave down, which is a corrective of this entire move up. And if you look at this last piece down, because that's what we should do to find out when it's going to finish, then it seems that the likelihood of one more fall, if I analyze this piece, seems pretty likely. So if we then move down to the day chart and then look at within this, so basically what we're doing is now looking at this last piece right here, okay, right in here, we have the red circle. Within this three-wave correction of this mega bull run on gold, right? Then if you then zoom into the day chart, because basically what I'm now doing is then zooming into this part, right? And then zoom into the day chart. If you then zoom in, then I want to talk about this part here, where I have the green circle. All right? Basically, if you look at that part, it looks like we're having this kind of motion. So that would indicate one more fall. But if you look at the time factor, and I already said this live as well, so not after the fact, that 1, 2, 3, 4, 5th day, we couldn't break this bottom. Do you see that? 5 days, couldn't break this bottom. That is time factor. We talked about time factor in the educational webinar with Talanta as well. And if it doesn't break a bottom for 5 days, the chances of it breaking then later on are definitely diminishing very fast. for a substantial period of time. It doesn't mean that the bottom will never break. All I'm saying is that the likelihood of a bigger retrace is now higher than an immediate break of this bottom, and that bigger retrace could be anything like, for example, the blue box in here, which was something like, looks like 3 weeks. It doesn't have to be that long, but the likelihood of gold breaking the bottom at 1180 or 1170 this week seems to me small, personally. It's definitely possible. You never know. Nothing's 100%, but this week, small. Next week, maybe a bit bigger, but it's relatively small still, and probably the week after, I think, roughly. But let's see. This is definitely showing that, looking like we're going to make a bigger correction. But the question is, where are we going to turn? So I have an idea, I think, how long this correction is going to take, as I said. So that's when. The question is now from which level. And if you look at it, personally, if it breaks above this 1337, then the currencies, the commodity is definitely doing something that different than I expect. And if it breaks above 1422, then the whole thing is invalidated, basically. Then something else is going on here. All right. So, and if you then put a fib on this down move, then what I'm expecting is a slow sideways grind that either can turn at the 32 or the 50. Looking at the impulse now, the 50 seems more likely. Usually it's the 32 that's more likely. Anywhere in between is possible, probably too. So that's the area that I would think that could be the turning spot for downside. So that would be somewhere between 1270 and 1300. 1330 being the max. Above 1330, then something else is going on, and especially above 1420, then the whole thing is probably not going to happen, what I'm thinking. But otherwise, I would expect one more downside. If that were not, till now it's been going pretty well. I've had all these downsides were correct so far. So let's see if this one will be correct too. But so far, all the analysis is proving very correct so far on gold. So I hope that will continue for one more time or for many times. And then I'm expecting a fall to these targets, which would be 1111 or maybe even 1030. But we have 1080 in between, which is that big 50 fib of the month chart. All right. So that's what I think on gold. Let's take a look at dollar CAD, although Patrick left already, I see. So let's take a look at dollar yen. Because Greg is still here. Oh, Patrick's back. Good. Okay. So let's take a look at dollar CAD then. Graham, yeah, definitely. That's you told me about that last week, didn't you? Indeed. Okay, that's annoying indeed. I'll send a message again, okay? Sorry about that. And Ahmad, the moving averages I use are Fibonacci sequence numbers, okay? Fibonacci sequence numbers, and they're EMA, not SMA, all right? So let's take a look at dollar CAD. Dollar CAD had just an amazing move up in these days. That was a while back, but pretty impressive. After we broke out of this weekly wedge already, hooked back, broke it back again. We are moving upside, but very slowish. Very, very slowish. So that's, not too encouraging, I would say, for the upside. Would rather see slow, methodical down and then break up, personally. Let me just take a quick look at the weekly chart. The weekly candles definitely showing higher highs, higher lows here too. So no doubt about the uptrend. That's for sure. There's one major resistance level in here. As you can see, lots of tops at 106.58. That's still 120 pips away. The A chart too is showing up upside. Only it's kind of losing some pace here, right? That's the only thing that could be concerning. Could become like a trend channel, despite its weaker angle. Something like this. There's divergence between these tops as well on the 4-hour chart. One-hour chart. Well, you know, price is moving down now, but on all time frames, it's still an uptrend, to be honest. Maybe only the 1-minute chart and the 5-minute chart probably, because otherwise, and the 15-minute chart maybe has just it's making a downtrend. But otherwise, we can see clearly that on all time frames that counts for trend definition are upside. So I like the currency actually. It looks like a very nice correction. And if you put a line on these tops, that looks pretty cool actually. I like it. A break of this line would be nice for that upside continuation to 106.50. So a break of that trend line is awesome. I think that would be very worth waiting for. I like that trend line. You can see that we're in uptrend on all time frames, weekly, daily, 4-hour, 1 hour. We're making a correction here. So if we break above, that would be a break in the same direction as the trend. All right. So that's pretty cool. I like that. That's a good currency to keep an eye on, Patrick. Thanks for the heads up, actually. Makes a lot of sense. Does everyone see why that is the safest trading? Because you're trading a breakout with the trend. The absolute safest is to have an impulse correction and then an impulse continuation with the trend. This is a bit different because it's moving corrective to the upside and then corrective to the downside. So we have correction, but with the trend. The upside is with the trend. Better would be impulse correction, impulse with the trend. That would be the absolute best, but still good enough. All right. If you're a bit more aggressive, you could even look for a bounce here, a bounce like this, a hook back to it, and then the next break, for example, right in here. But then you have to realize that the currency is probably going to hit this trend line and then bounce back of it. So it would be a small trade, more riskier as well, because we're still on a small time frame. We're in that downside momentum. So you're trying to catch it at the kind of the bouncing spot. That's definitely more risky. But if it does, if you catch it there and it sometimes it just breaks in one shot, then you're good to go already. Otherwise, you might be late with catching it. If it doesn't give a pullback here at the trend line, for example, and then breaks after that. But I wouldn't take it here, right here, personally. It could be at support, but I'd rather wait for a break of a fractal, personally, instead of catching it. For me, it doesn't make sense to catch it right at the turn. It's not worth it because it's not worth the stress. It could continue a bit lower, stuff like that. So that's where I put the stops too, Kiro. When we get the break of a fractal, I use the opposite fractal for the stop loss. So if it moves up, it moves down, and then it turns here, we get a fractal, and that's where I would put the stop loss once we break above this top. I can put the fractal, the stop loss underneath the opposite fractal here, where I have the red stripe. So usually I use fractals or swing high, swing lows for FIPS. And but that's a very tight stop loss. It's using the same time frame. If you want to use a wider stop loss, then you have to zoom out one time frame and use two kind of supportive resistances away. So it would be maybe not this one, but this one, for example, or this one. Then you have a wider stop loss, which would make, then you could, you have to go for a higher target that has a good reward to risk, but you're giving more space to the currency. All right, so that looks cool. Let's take a look at the dollar yen. Unless Patrick has something to say, I will assume that that everything is okay now. All right, no comment from Patrick. So great, let's go to dollar yen. All right. Dollar yen, basically nice uptrend channel here. If you connect the bottoms, we're right at the bottom. So this could be a bouncing spot, just like with all these dollar things, the dollar currencies, basically. I mean, they're all at talking spots, bounce or break. This 2-on-2, basically. Here we had a breakout though of this kind of correction, as you can see. Look at that, correction to the downside. Here we had a break already. So not going all too far though yet. Let me take a look. We had engulfing 4-hour candles here. Which could signal that continuation. Some wicks here as well. I don't know, nothing that appealing to me somehow. I mean, it's about the same as, I mean, we could draw the corrective line like this, I guess. And well, a break of that line would still be good, like the USD CAD, I think, for a continuation could be good. USD CAD has a bit better trend line, in my opinion. That's probably the difference. It's a bit neater, that's why. Otherwise, a break of that trend line could be a good up trade as well with the trend. I'm not looking for any shorts unless we either break out of this trend line at minimum, but preferably also, if you look at the 4-hour chart, we want to see a break of at least this level, at least at 198, 98, 99, 85. So, something like this. Then we're back in the downtrend. Otherwise, any shorts in here is very dangerous. And why? Well, it's very simple. If we look at any movement within these two green lines, the longs would have fared a lot better than any shorts. All right. Now, some shorts would have worked okay, somewhere right in here, or right in here, or right in here. Okay, would have done decently. But you can see that the most potential and the fastest moves were to the upside, right? That's why defining the trend is key. So let's move on to something else. Let's continue. But this is similar to the USD CAD, so I'll put it on the list as well. Swissy Swissie is already breaking to the upside, actually. Let me take a look at the 15-minute world here. Let's see. Yeah, it looks good. We're in uptrend. 4-hour chart, higher highs, higher lows. 1 minute, 1 hour chart, we're actually breaking the highs here. Bullish price action. 50-minute chart, we're right at the top. Let me zoom in. So looking good. This too, we'll look at the end of the hour. Let's see. We're pushing above this high. So let's see how it goes. The AO, that's a good question. The AO, well, the 4 hours chart is still pushing. 1 hour chart is back to the zero line here. So that could give a good indication that this upside or this correction is over. Just like the euro, that could be a good indication. Here too, any move back to the zero line is a potential of the correction being over. So here too, that would be valid. Like that. So anytime the AO goes back to the zero line, there is a potential of it being a good dip, basically. All right. So let's take a look at something else. But this looks like a very mild correction. What's the euro doing actually now then? Just a quick look in between. Euro is back at those moving averages. From a smaller time frame perspective, this looks like a retracement. I'm very leery of that personally, because I'm looking at the bigger picture and seeing this as a potential place where we could move down. But we definitely have the potential of moving a bit more up before we make that fall. All right. If I'm interested in a bit up, as I said, no. But so let's move on to the euro-yen, for example. Many trend lines here. For example, like this one. That was interesting because we had a break here, a back, break, and then another break here. At the moment, I don't know. Let's see. Probably will be upside. The only thing I don't like about it is that it's relatively close to this top. Hit the 786 4 hours ago, or sorry, 1 hour ago, right in here, and is moving down from there. So, well, it definitely has. I mean, looking at this up, sideways up, we're definitely back at the support zone. So any move like this or any up, down, and break could be a good move up, to be honest. Okay, because we're on uptrend. It's just respecting some resistance but that's all. So that seems pretty likely. Let's see, 1 hour chart. Yeah, but it's not going to turn in a dime, I think, to be honest. It probably will bounce here. I'd rather wait for a break of a fractal instead of taking a fib here still. It's not, it looks like a good support zone right in here, but I would rather wait for more confirmation and then take the break. So it's something that I'll put on my watch list. Let's take a look at EuroCAD quickly. EuroCAD is funny. It's actually the opposite of the dollar CAD. It has a big move down, correction up, and we have a trend line connecting the bottoms here. That's funny. That could actually be a good break to the downside here. Pound Swissy moving to the upside, but it's moving back to these tops. Well, if it would make a price action signal at these tops, that could be a good range trade back to the bottom. All right, but it's still not there yet. That's another 50 pips from there. Let's take a look at the Euro odd. Euro odd is right back at a trend line, bigger trend line, but we're breaking through that actually right now. If it breaks that trend line like this and then hooks back like this, then now next one would be a great break. Click the pound out quickly. It's kind of similar to the Euro odd, to be honest. Although there is a big difference in the fact that it made a higher high here and now a lower low. Kind of funny. It's funky here at the end. Something like that and this. Kind of looking funny. All right, that's about it. Let's take a look if there's, so we got 5 minutes left to the top of the hour. And then I'm going to take a look at all these hourly candles basically. Let's take a look. Let's see some questions before we have 5 minutes to answer some questions, and then we'll take a look at the hourly candles. Okay. So Rich is asking trading style. Basically, it's what I look at mostly is 1 hour trend lines and the 4 hour awesome oscillator. And the 4 hour awesome oscillator is explained in intra-week strategies webinar. And the trend line breaks is explained. There's a trend line webinar on trend lines and trend channels. So those are my main two methods. But we do look at other things. I mean, I want to see it from different perspectives to make it worthwhile for a bigger public than only swing traders, because that's what I am. So I do try to look at intraday positions and try to look at big position trades. Although most of the time we don't have much time for that, unfortunately. Although we were looking at the EuroCAD, right, to the upside, but that turned into a break-even trade. So, for the intraday, we use the London Open trade and the MACD trade, and those are explained in swing trades, scalping strategies. And those videos you can find, let me show you that, right here, free education. Go to www.admiralsmarkets.com, click on education, click on webinars, then you come here and you'll see, besides our educational, our live market ones, you'll see the educational topics. But if you go to video archive, You can see how to trade using multiple time frames, trend line channels and trading trend lines and trend channels, intra-week strategies, scalping the Forex market. Those are the ones we're using in this live session. Trading breakouts will be useful. I mean, all of them are useful, but I guess those would be the most useful ones probably. Because we're using it in our session. But the importance of time in your trading, all of them are useful in a way. But developing a trade plan using moving averages, we don't use that, but in here. But these are all the webinars since February. Okay. Trading the jigsaw, indeed. Let's see, where is that? Classical trading, the jigsaw puzzle. Yeah. Yeah, indeed, Patrick. Thanks for that. I'm glad you like that. That's just putting all the pieces together, basically, indeed, and kind of like placing all those puzzles, the trend lines, the trend channels, the anti wave, the fibs. You could, use it all to trade discretionary, basically. But that takes experience, definitely, to do that way, and doesn't come 1, 2, 3. But eventually, all it boils down to is buying and selling, and when you do that, when you decide to do that, yes or no. So you can do that in a discretionary way or non-discretionary way. If you're just starting out, usually people try to focus on non-discretionary methods because it's easier to stick to a plan that's very strict and very precise. And it's easier with the psychology. And usually the more experience you get, the less need you have for a very strict trading plan. You always need a trading plan, but it doesn't have to be that, to the teeth, let me say it this way, usually speaking. Oh, it depends, though. Let's see. I prefer the AO, personally, Lubomir, because I use it for edit wave counting. I use it for swing high, swing low determination, swing high, swing low, and I use it for retracement. So it's back to the zero line, then I know that the minimum retracement has been met for a proper breakout, kind of. Although sometimes it breaks out earlier, but then I look for a break, pullback, continuation instead of the break. Then I'm a bit more safer. If the arrow is back to the zero line, then the first break is a higher likelihood of breaking. While if the arrow is not back to the zero line, then the break could turn into a false break. That's why I look for a break, pullback, continuation. I hope that makes sense. And Alcana is, let's see, we did take a look at the pound dollar and euro pound, but that's okay. We'll take a look at it again because the top of the hour, we've reached the top of the hour. So let's take a look at that right now. One second. I'm searching for some options here. Oh, yeah, doesn't matter. Let's move on to look at those the hourly candles. Okay. Rich, do you have a weekly trading room? Not sure. What do you mean with weekly? You mean that we look at weekly candles? Or do you mean once a week? So 1 hour chart here, that's looking pretty good to me, to be honest. Let me take a look at the 4 hour chart. So the only problem is this 4 hour chart still. Yeah, 1 hour looks good, but the only thing is that the 4 hour chart has still a pretty bullish 4 hour candle on the euro dollar. Let me see when that closes. That opened 1 hour ago actually. Ooh. So that's the thing is we have 1 hour engulfing bearish candles, but we have 4 hour engulfing bullish candles. So I changed my mind. I need a break of that trend line and a break of probably this fractal here on the 4 hour chart. Otherwise, the engulfing candles could still be in play and push it higher. That was my plan, but if I reevaluate the currency, to be honest, I wouldn't want to short it right in the middle of a 4 hour candle like that. I don't think that makes sense. Price action is bullish now, although we're in a downtrend. So I want a break of that bullish resistance, or in support, sorry, before trading it to the downside. So I'm not looking to trade it to the upside because that's counter trend, as I said. But looking at our 5-minute trade, right, as I said, I don't know if anyone took it or not, but I wasn't interested in it. But as I said, if it moves down here and this is below the 20 and bounce hits these moving averages and goes a bit sideways, that could be a support area, which it's doing right now. But I already said I'm not interested in that, right? So it definitely could make that move up like this, but I'd rather skip that. But looking at the 4 hour chart, it does look like a retracement now, actually. Looking at this candle. Didn't notice that much when I looked at it an hour ago because I was really focused on the downside because we're in a downtrend, logically. But looking at price action on this 4 hour chart, the fact that we are right at this support level, that could spiral it higher. Let me see if the pound is maybe the same. Let me take a look. Pound is the same. So let me move on to the euro pound. Pound basically, Alcana is in a downtrend, but we're right at double bottom. Now it's different than the euro, which is in a wedge on a higher time frame. The pound is looking good for downside, but we have to break these bottoms here. Otherwise, we could here too see a bigger correction. All right. So this fib, any of these fibs could be bouncing spots, but in that regard, we're only at the 236. So it could move up to the 382, for example, the 50 maybe. And then if we see turning signs in here, that could be good downside. All right, the euro pound broke the high, the tops here. So that could be a good trend line as well, like this. By the way, I forgot that. That could be a good trend line break here, like that. If we then zoom into the 50-minute world, a break of this high, if we move up here, respect its line, hook back, and break like this, I will take a break of that high and put my stop loss here. That looks good. Let me take a look at the others. New Zealand, I'm monitoring it right now. It looks, to be honest, it looks like a good wick on the 1 hour chart here. So that could be a rejection, but then again, if you look at the 5-minute world, it's more like an impulse sideways move. So it's becoming a bit iffy. I'm going to look at this live and keep an eye on it live. If we break above this high, then I'm going to wait another hour at least, because then probably the rejection wasn't big enough or strong enough. Let's take a look at the Aussie. The Aussie is a bit better. This Aussie hourly is a bit better because it has a bearish close instead of bullish close, first of all. The bearish close is within last hour's candle. All right. So this is the hour close. You see that last hour is below 2 hours ago. So that looks better. So that could be an option. Let me continue quickly with dollar yen and dollar CAD. Dollar CAD is still far from breaking that trend line, so that doesn't make sense. The euro CAD is bouncing at that trend line. Dollar Swissy. Dollar Swissy looks good. But it has, it has, I would rather catch it a bit lower somehow, but it looks good though. 1 hour close above the high. Yeah, the only thing I need now would be a pause like this, and then to take the next break. All right, because otherwise we're still in one movement here. A break of this high would be. The thing is that if we break this high, it would be 96.80. The next fractal is all the way here at 96.40. That's 40 pips, which I consider a big stop loss for 5-minute world personally. I think you probably too. I don't think many of us would like to have a 40 pip stop loss for a 5-minute chart, because the problem with that is that the likelihood of the currency moving 40 pips from here to the upside in one shot without a retracement is small. So that reward doesn't match the risk, or the risk doesn't match the reward. So what I want to see here is a pause like this, which would give me the opportunity to put a stop loss like here and then catch the next break. That would make sense. All right? Alrighty. Let me take a look at what else we were looking at. I think the Aussie. Yeah. I think that's it. So out of all those, I would say the Aussie looks the most interesting at the moment for me. So let's see what I want to have, or what I want to see. Let me say it this way. Okay. What I want to see is a 50-minute world, because we have a 1 hour rejection wick like this. There are a few options. Basically, one of them would be to take another retrace of that 1 hour wick, retrace of that candle for more downside. Wait for the break of the low of that 1 hour last hour's candle for more downside. So the advantage of breaking of the low is that if it continues up, which sometimes it does happen, you're not in, or we're not in, or I'm not in. And if you take if the retracement is taken, then you're in with that chance of it moving up. If you take the retracement, the stop loss is smaller though. So it depends from case by case. Let me say it this way. This one I'm tending to think of and more of a confirmation, because we did break this high, although we do have a rejection candle that's close to those highs. It is technically above it, and let me check how many pips it is. 16. So it is a break, and a pretty big impulse. So this could be slow correction and then one more upside. So I will be a bit more cautious, although it has the potential of falling fast. I'm only interested in the fast fall. If it moves slow like this, I'll take it off or move to break even, because we could see another breakup. All right. So the only thing that I would be interested in here is if it bounces up and down here for a while, and we get a fractal at the top and a fractal at the bottom, especially the bottom fractal. That will give me, on the 50-minute chart, that will give me a clue where we have a key bottom on the 50-minute world, because we have to have that, because until now it's just one move up. So we're going to have some up and down here, like this, before we get another impulse, most likely. Once we have a fractal here, then the next break to the downside would be my trade, but I would monitor it very closely. I would like to see a break, not a slow methodical correction like this. Otherwise, it could be ready for one more upside. All right. So the Aussie looks the best to me. So let's keep an eye. I'll keep an eye on that during the day. Let me just take a look at some questions here. Patrick, the AO is something we're going to discuss in a webinar, indeed, with the called indicators. Well, I'll be discussing that. I'm not sure which indicators Toronto will be discussing yet, but I'll be definitely looking at the AO, indeed. I think that's next week, Thursday, not this week. This week we're going to look at trading plans, which is definitely recommendable as well. I would think it's going to be good stuff there too, but next week will be indicators. And then the trading room, no, basically this is the one we have now on Tuesday, Wednesday, Thursday, London Open. But we don't have a trading room that's open every day for London and New York, at the moment at least. All right. Fractals are basically just two candles to the left, two candles to the right. So basically, it's just a visual guide. You can find tops and bottoms yourself with our own eyes, right? We know that this is a top. We know that this is a bottom. But sometimes these in between are difficult to spot. So it's just a help for me. What it says basically, and some of these fractals are more important than others, right? The big bottom is more important than a level on the 50-minute chart somewhere in between. These levels probably don't mean much, most of the time, unless you're really trading 5-minute charts or something like that, right? But what it means, though, is that technically it's a place where a candle has a high that is higher than two candles to the left and two candles to the right, or a low that is something like that, and then two candles to the left and two candles to the right that have higher lows. And this one is the highest low, lowest low. And this one is the highest high. All right? Two candles to the left, two candles to the right is the minimum. It could be more, it could be 10, it could be 100, it could be 50, it could be 1,000, but 2 is the minimum. Sometimes you see a fractal when there's only one candle, but that's not a confirmed fractal. That fractal will disappear if the second candle punches through that level. The fractal will never disappear if there are two candles to the left and to the right. Then it's fractal there forever. So for example, if we take this example here, there are two candles here and many more candles here. Or if we take this one, there are tons of candles to the left and a good amount to the right, and then eventually it gets a break of that fractal somewhere later on. But you see my point. Okay, cool. So let's see. Okay, cool, Vlad. I'm very happy that that you find the webinar interesting. That's great. That's perfect. Very happy about that. Let's see. What do you recommend? Well, I would recommend, depending on your experience level, I don't know exactly, what experience level you have to share. How long have you been trading and how intensively? Part-time, full-time, how many years or how many hours per week? Part-time, 1 year. I think starting with higher time frames is definitely good because it takes time to put the whole puzzle together. And if you stick to 4-hour chart, then you have less puzzles on the time frame side of it to deal with. And the thing is that it makes a lot of ups and downs, and it's difficult to distinguish which up and down are really key. Those smaller time frames, which one you can ignore. That takes time and experience to get that feeling. And I would recommend demoing lower time frames so that you build a database of that recognition and practice it. That's okay. In a demo account that has no particular meaning, or even if it does a meaning, but it's a demo, you're not losing money. So you can practice that, but if you want to trade seriously, either demo seriously or real money seriously, then probably higher time frames at the moment is easier to monitor, to catch good areas, and not get confused in the woods. So I would recommend that indeed. If the 4-hour world is too big regarding stop losses, then maybe 1 hour for entries. But try to focus on the 4-hour analysis and only look at 1 hour for the entries then. That's what I would do. But I would definitely demo, but still look at smaller time frames, but try to demo it first and see if you're consistently profitable for a while with that. Then you can move on maybe there, but it has to be for a while at least. I'm talking about months, at least months. All right. So that would take some time usually. Let's see. I don't know what EOD charts are, to be honest. What is that? Thank you. Yeah, end of day, definitely has the advantage of, well, yeah, that depends on how much you want to be involved in the market. End of day could be slowish, right? Especially if you have enough time to trade, even if you do it part-time. Then again, even looking at day charts, they do give a great feel for potential space and potential opportunities. So definitely you can use that as well. It will hopefully reduce the need to look at lower time frames, in between the day. So it depends on how frequent you can watch it and stuff like that. 4-hour chart is a good one too, I think, personally. You could use the AO strategy, for example, if you wanted to. All right. So that rounds it up, I guess. I will just give Sherry my email, and otherwise, let me know if you have still a question. I couldn't put the snail somehow. When I wanted to put the snail, I zoomed in somehow. I don't know why. But the at is the snail sign, of course. All right. So, well, I hope to see you tomorrow, 10th of July. It doesn't look like the Aussies moving a bit up. As I said, there's no rush in the Forex. It always makes a lot of ups and downs. So let's see. If this 15-minute candle closes, then we do have a fractal here. That's what I was looking for. So a break of that fractal with the stop loss above here could be a trade. The only thing I'm worried about is that this was a pretty strong move up, and once again, if it makes something like this and hardly moves down, then it doesn't look good. It looks more good for upside, to be honest. And then there's more dollar weakness probably to come, because then apparently the dollar is, we know that the dollar is at resistance, the euro dollar is at potential bouncing spot at these bottoms, the pound dollar is at the bottom. We know that. So although it seems unlikely at the moment in the sense that this is such a strong down move, it could happen, right? And you can see that here too, the euro is finding support here. at that bottom here. So that could happen with the Aussie too. So that makes it tricky. The dollar is an uptrend, but the lower time frames are showing signs of downside on the dollar. But the trend is up. So I want to trade it up, but the shorter time frames are not confirming that. So there's a mismatch in between that. So there's two things I can do. I can wait, or I could try to trade it with the lower time frames up, which I think is too early in my opinion, but depends on you as well. I think it's too early, or I mean, from like the time frames I look at it, or wait for a reversal on the lower time frames in the direction of the trend, as I already explained earlier on, which is fine. But if it doesn't happen, then just need some patience for it to in fact materialize. That's all. At one point, there should be some fall, even if it's just a correction. So let's see when it happens. Alrighty. So that rounds it up. Thanks for being here again at Admiral Markets. Hope to see you tomorrow. If you want to take a look at those educational videos, I hope you can find them. I showed you where you could find them, right? So we have a lot of them about everything, but fibs, all these concepts. Most of the concepts I use here are all explained by now, I think. So, and on Thursday we'll have an educational webinar with Talantala on trading plans. Alrighty, guys and girls, have a great trading day, and see y'all soon. Cheers. Cheers, Bogdan, and Alkena, and Cherry, and Patrick. Cheers.